Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra and here are the headlines we are tracking at this hour. India's GDP growth in FY23 slows to 7.2% but beats estimates. A faster than expected 6.1% growth in Q4 takes the full year GDP growth above the government's advance estimates of 7%. SEBI floats a consultation paper with plans to seek more disclosures from high-risk foreign portfolio investors. Those with more than 50% stake in a single corporate group may need to reveal ownership details within 6 months of face action. This comes after SEBI told Supreme Court it had drawn a blank in identifying beneficial owners of 13 FPIs invested in Adani stocks. The government allows semiconductor program applicants to reapply for more mature nodes. Minister of State Rajiv Chandrasekhar says Vedanta has not been successful in finding a technology partner for the 28-nanometer chips, but also clarifies that government has not rejected any applications yet. Anil Agarwal says Vedanta is fully equipped to make semiconductors in India. Anil Agarwal plays down concerns over Vedanta's debt, says lenders are very comfortable and the group's debt will be zero in a few years. Promises that the group generates enough cash to service debt and pay dividends to shareholders. Coal India plans to offload up to 3% stake via an offer for sale, aims to raise up to 4,000 crore. The floor price has been set at a 7% discount to the stock's closing price today. Government meets a 6.4% fiscal deficit target for FY23. Tax revenue and capital expenditure exceeds the budget target. Union Cabinet approves a new scheme to improve food grain storage capacity in the cooperative sector. The outlay for the scheme will be 1 lakh crore rupees. Elon Musk makes an unannounced trip to China, meets the country's foreign, commerce and industry ministers. This is his first visit since the pandemic and follows visits by other top American executives like Apple's Tim Cook and JP Morgan's Jamie Dimon. After the world wrestling body, the International Olympic Committee condemns the treatment of Indian women wrestlers. The International Olympic Committee in a strong statement says that the allegations by wrestlers must be followed up with an unbiased criminal investigation. Congress leader Rahul Gandhi begins his United States tour, addresses the Indian diaspora in San Francisco, says the government tried everything to stop the Bharat Jodo Yatra, but its impact kept on increasing. Also on the program, CNBC-TV18's Future Female Forward campaign reaches Hyderabad. A special discussion on bridging the gender gap in the workplace and society coming up. Straight to the day's trading action. Dalal Street snapped its 4-day winning streak. Nifty and Sensex fell over 0.5%. The fall was led by financials. Nifty Bank slipped below the 44,000 mark. Meanwhile, mid-caps relatively outperformed the blue chips to end the day 0.25% in the green. Yes, the government plans to raise up to 4,000 crores via an offer for sale in Coal India tomorrow. The government is planning to offload up to 3% stake. The floor price has been set at 225 rupees per share, which is at a 7% discount to the stock's closing price today. But now to the big story of the day. India's GDP growth in FY23 slowed to 7.2% but beats estimates. A faster than expected 6.1% growth in Q4 takes a full year GDP growth above the government's advance estimate of 7%. Lata Venkatesh is here to decode the numbers.
Yes, that's right. This is a huge positive surprise in terms of the fourth quarter number. The GDP number coming in for the fourth quarter at 6.1 against a CNBC-TV18 poll of 5.1. I have seen positive surprises in my time, but a 1 percentage point increase, which means 20% more than what the street was expecting, is a first. This is hugely better than what the street was expecting. The GVA, incidentally, is 6.5%. Means it's even better than the GDP, which could be a little negative because GVA plus taxes minus subsidies is GDP. It looks like much less subsidies have been given, and that's why the GDP has not grown as much as the GVA has. But the star performers are actually, it's an all-star team. Agriculture has done very well with 5.5%. Manufacturing has done reasonably well at 4.5%. Many people were expecting 1% or less. But the big performer has actually been construction, coming in at 10.4%. And Trade, hotels, transport and communication. It's a large sector, the largest contributor to GDP. It's largely MSMEs and the small sector. That's grown at 9.1%. Very good, very heartwarming because this sector was maimed the most during COVID, and the rest financial sector 7.1%, nothing much coming from public administration. So excellent quarterly performance, and because of that, the full year performance, instead of the 7% that everyone was expecting and our poll threw up, it's coming in at 7.2%. Now let me look at the small things that did not work very well, and that is GDP looked at from the expenditure side. Personal final consumption expenditure grew by only 2.8%, which is bad. You want more consumption for the multiplier effect, and that's a little sad. Government consumption also was low, like we told you, when subsidies were lower. So that's come in at only 2.3% higher for the fourth quarter, I mean. But capital formation has come in very well at almost 9%, 8.9. So that's a big contributor. And the fourth big contributor is net exports. That is, you deduct imports from exports. Normally, it's a big drag because we import much more than we export. But this time, it's hardly a drag, because our services exports have done very well and imports have done not so well, probably because we had some slowdown. The economy was not chugging along very well, and therefore net exports is also not a drag. All this has contributed to a GDP growth of 6.1%. Consequence, we should expect economists to start probably revising the FY24 current year forecasts a little higher. All told, very good numbers.
The economy retained good momentum heading into the current financial year. In fact, we could even stick our neck out and say that when the first revised estimate for the financial year ending March 23 are released next year in February, we will be able to see even a further upward revision to these numbers, because as we pointed out last time when we spoke on the GDP data, the second and the third quarter numbers of the financial year ending March 23 were artificially depressed due to the base effect coming from the upward revisions to data starting from 2019-20.
And you can watch an analysis on the GDP numbers on State of the Economy tonight at 10:30, only on CNBC-TV18. And let's start with some macroeconomic data now. The government has just released its provisional statement of accounts for FY23. It has met the fiscal deficit target of 6.4%. Sapna Das is here with more details. Sapna, take us through the highlights.
Well, naturally, this is very much an expected lines. The government was extremely clear that they will be able to stick to the FY23 6.4% fiscal deficit number. But having said that, probably some of the data points, point towards maybe better fiscal management. So, primarily, if you look at your revenue deficit numbers, they are much lower than what was budgeted. You look at your overall revenue expenditure, that is also trending down a bit, and your primary deficit is also lower than what was anticipated. Your interest payments are lower than what was anticipated, and hence your overall fiscal deficit in actually absolute terms is lower than what the government had anticipated, and this is all as of March end. So this probably is pointing towards better fiscal management. Also, in terms of your revenue side, your tax aim, it's at 100.5% of the budget. It appears that it has just met the aim, but yes, let's also keep in mind that the FY23 tax revenue targets were actually increased at the time of the budget on Feb 1. So to that extent, that is something that is noteworthy. I think one of the most important points also that has emerged is, apart from the lower interest payments on government borrowings, because that has been a big talking point so far. Apart from that, I think the government exceeding its capex target, 101% of the budget, I think that is also very noteworthy. They have a higher budget for this year, and most likely, I think, if the GDP numbers are going to be what is as expected, then maybe that pace of capex, at least in the part of the government, is likely to continue. This is showing better fiscal management, all said and done.
All right. Thanks, Sapna, for getting us that piece of news. Let's move on now. In a bid to increase transparency, market regulator SEBI wants more disclosures from high-risk foreign portfolio investors. In a consultation paper, SEBI has proposed that FPI with more than 50% stake in a single stock or group will need to reveal ownership details within 6 months or face action. The move comes after SEBI told the Supreme Court it had drawn a blank in identifying beneficial owners of 13 FPIs invested in Adani stocks. Lata Venkatesh is here with more on SEBI's proposals.
That's right. SEBI had to acknowledge publicly that it was hitting a wall when it was trying to get to the final beneficial owners of certain funds. And this consultation paper appears to be that it wants to plug that loophole. The purpose is that if there is any fund which is investing too much, over 50% in only one stock or one group, one conglomerate, then the final owners, they want a complete list, full granular detail. So the main points of the paper is that SEBI says it has found that in some cases, funds which invest overwhelmingly in one stock is owned by funds where they don't know the detail, and the shareholding pattern for a long time has remained the same. So their suspicion is that there could be a connect between the promoters of that company and the funds, and therefore they want full granular detail of the funds, of the companies or persons who are investing in these funds, which are overwhelmingly invested in one or two stocks. That's the purpose. Now, will all funds have to comply and give granular detail? No. Some of them are exempt, like sovereign wealth funds. Even if some of them are overwhelmingly invested in one or two stocks, they don't have to give granular details, nor do central banks or other foreign government-owned pension funds. Even private funds which have a very large number of investors, those also are exempt from these kinds of granular detail. All others will be treated as high risk, and they will have to give details if they own any one stock to the extent of 50% of their equity, of their AUM. If they can't give those details, those funds will be deregistered, and these funds get 6 months to comply with these rules. Now, the beneficial owner, the final owner, is very rigorously defined. It's not just what the PMLA rules define. The Prevention of Money Laundering just say that any person who has over 10%, you need to give details. But often, the final owner tends to be a company, and the company is owned by other companies. But this time, SEBI says it wants a natural person who owns the entire chain, and therefore they are more rigorous in demanding granular details of the ultimate beneficiaries. Finally, the consultation paper also covers some funds which are investing on behalf of people in neighboring countries like China and Pakistan. There is a press note 3 of the government which requires these funds to come only through the government. SEBI suspects that some of them may be coming through FPIs, and therefore large FPIs, which over 25,000 crore investments in India, have to give additional disclosures. That's the sum and substance of SEBI's consultation paper.
All right. Thank you very much for reporting on that major consultation paper there, Lata, explaining our viewers the intricacies and why it's important for the markets as well. Moving on, the government says that it has allowed semiconductor program applicants to reapply for more mature nodes. Minister of State Rajiv Chandrasekhar told my colleague Ashmit Kumar there is no communication from the government about not pursuing Vedanta's 28 nanometer fab proposal. He also added that the company is still trying to locate technology for the same.
I want to clarify that there is no communication from the government that we are not pursuing the Vedanta 28 nanometer fab proposal. Currently, they are engaged with, and I've said this before, they are engaged in a negotiation to locate and to sign up on a 28 nanometer manufacturing technology. That is a process that is still work in progress. So while that is in progress, we are also saying that we are opening up a window where if they or indeed anybody else wants to apply for 28 nanometer or 40 nanometer technology, and we understand that they have access to 40 nanometer technology, that is this consortium, as well as some other consortium that are interested, that they should go ahead and apply for the 48 nanometer technology fab as well.
All right, so let's see what happens to Vedanta Foxconn bid to make semiconductors in India and for incentives under the Semicon program. Vedanta's Anil Agarwal actually spoke exclusively to CNBC-TV18's Nigel D'Souza. He claimed that the group is fully equipped to make semiconductors in India. He was responding to reports that came in earlier today.
Semiconductor, these are the very technical, we are very comfortable, and this question will come and go, and whether 29 or 30 or 20, we are fully equipped. We have a David Reed, who was the pioneer of making semiconductor. He is hiring 400 people to make this happen. We have already selected the site of Gujarat, and government is with us shoulder to shoulder.
Anil Agarwal also played down the concerns around Vedanta's debt. He said banks are very comfortable and promised that Vedanta will be free of all debt in a few years. But he did not provide any specific timelines. Agarwal said that he's willing to sell stake in the company if needed, but also added that there are no plans to sell promoter stake as things stand.
I don't even think that how the payment will be made, because we have a cash flow and this payment will be made. So as far as our debt equity ratio is very comfortable, our banks, lenders, everybody is very, very comfortable. My dream, my vision is in few years, I will have a zero debt company.
You have a big vision for the country as well as at Vedanta Resources. Could it involve paring some stake in the listed entity Vedanta Limited from 68.11%?
We have no plan, but as no plan at all. But hypothetically, I'm talking about, we have to take our country as a developed nation. And for that, if any point of time, for me to sacrifice, to take this company forward, I will do it not for my personal benefit, only for my shareholder benefit, and take my country forward.
And moving on, this is a big news coming in for the power sector and our renewable roadmap as well. The Central Electricity Authority has notified the National Electricity Plan from 2022 to 2032. The plan highlights power generation capacity that needs to be built in order to meet rising electricity demand. Abhimanyu Sharma gets us all the highlights. Abhimanyu, you've been going through this report. It's fairly long. It speaks about various sectors in renewable energy, the kind of coal-powered plant capacity we would need. Give us a sense of the key roadmaps here.
The Central Electricity Authority has notified the National Electricity Plan from 2022 to 2032. The share of non-fossil based capacity is expected to increase to 57.4% at the end of 26-27 and further to 68.4% at the end of 2031-2032 from around 42.5% at present. Rupees 33.60 lakh crores will be needed for power generation capacity addition from 2022 to 2032. India will need to add a capacity of nearly 1.8 lakh megawatts of renewable power by 2027 to meet its rising demand. Currently, India has 1.56 lakh megawatts of renewable energy capacity, while the CEA has reiterated the government's target of 500 gigawatts. It remains to be seen till what extent this is going to be followed in letter and spirit, not just by the union government, but also by the states, who are, of course, an equal partner with the union government and also an important cog in the wheel as India wants to transition towards renewables.
Remember, not just India's renewable energy roadmap, climate action goals, but the global targets will be in focus this year at the G20 and also COP28 in the UAE later this year. We're going to take a short break, but coming up, Elon Musk makes an unannounced trip to China. The country's foreign commerce and industry ministers will be meeting him. This is Musk's first visit since the pandemic. Details when we are back. Moving on, the international wrestling governing body United World Wrestling has for the first time spoken against the treatment meted out to Indian wrestlers. The global wrestling body has condemned the temporary detention of wrestlers and has also warned of consequences if action is not taken in the matter. The International Olympic Committee in a strong statement has said that allegations by wrestlers must be followed up with an unbiased criminal investigation. Meanwhile, Sports Minister Anurag Thakur urged wrestlers not to take any steps that may cause harm, added they should wait for the Delhi police to conclude their probe.
मेरे प्रिय खिलाड़ियों, आपको दिल्ली पुलिस की जांच का इंतजार करना चाहिए, विश्वास करना चाहिए। दिल्ली पुलिस ने सुप्रीम कोर्ट में कहकर एफआईआर दर्ज की है और उचित यही होगा कि आप जब तक ये जांच पूरी ना हो तब तक इस तरह का कोई भी कदम ना उठाएं जिससे खेल या किसी खिलाड़ी या किसी को कोई ठेस पहुंचे।
Moving on, Rahul Gandhi is visiting the United States in an effort to reach out to Congress supporters overseas. He arrived in San Francisco on Tuesday. Over the next 6 days, he would be visiting think tanks, academic institutions, and address the Indian community in New York on the 4th of June. This visit comes just ahead of Prime Minister Narendra Modi's state visit to the United States in July. So, what are the larger political implications of Rahul Gandhi's US visit? Here's a report.
Anybody who is poor in India today, right, when he looks at the extreme wealth that a limited number of people have, in some way he feels the same thing that you feel, that what is going on? How is it that these 5 people have lakhs of crores and I have nothing to eat?
Congress leader Rahul Gandhi taking the attack on Prime Minister Modi and the NDA to the diaspora in the United States. Months after being disqualified as an MP and days after Congress's victory in Karnataka, Gandhi arrived in the US. This is just a month before Prime Minister Modi's state visit to the United States. During the next 6 days, Rahul Gandhi will be meeting academics, experts on artificial intelligence, think tanks, politicians and journalists.
You cannot cut hatred with hatred. It's impossible. Right? You know that. You can only cut hatred with love and affection. And I was surprised at how easy it was to erase hatred in India.
The former Congress president will be using this opportunity to brief the diaspora and India watchers about the Bharat Jodo Yatra and the Congress's campaign against the BJP. During this visit, Rahul Gandhi would also be addressing a press conference in Washington, D.C. His visit culminates with an address to the Indian community in New York. This outreach can be seen as an attempt to win over the influential diaspora in the United States, which has been consistently wooed by the NDA over the last 9 years.
He's presenting himself as the sort of polar opposite of Narendra Modi, who he describes as somebody who spreads hatred and divisiveness. He's somebody who spreads love and tries to join and unite. But I think that, he unfortunately, the BJP has managed to label him as a pappu, somebody who's quite useless. And it took something like this 3-month-long Bharat Jodo Yatra to erase that impression that he's been, carrying for the last 9 years. So it is part of the whole image makeover of Rahul Gandhi.
Experts say a diaspora outreach will have few electoral benefits, but is part of the Congress's strategy to counter Narendra Modi's messaging to the 33 million strong Indian diaspora abroad.
The Indian diaspora, especially in the US, has really arrived, and they are amazingly successful. They are doing all, in every domain that they are really doing amazingly well. And we have seen Prime Minister Modi connecting extremely well with the diaspora wherever he goes. We had seen in the Houston and New York and everywhere else. Personally, I don't think there is any harm in Rahul Gandhi going and meeting the diaspora. The big question is what he says there. I mean, are we going to discuss our domestic politics in that country? That is some question that need to be asked by the political parties themselves.
The Congress hopes that Rahul's visit to the United States, after his visits to UK and Europe, will help the former Congress president in being perceived as a strong alternative to Prime Minister Narendra Modi. In New Delhi, Parikshit Luthra.
Moving on, Jio Cinema saw a record viewership of more than 12 crore for the IPL Finals. Viacom says the IPL Finals was the most watched digital event in the world. The app saw more than 2.5 crore downloads in a single day, which is also a record. CNBC-TV18's Future Female Forward campaign reached Hyderabad. My colleague Shireen Ban caught up with industry leaders to discuss ways in which gender inequality at Indian workplaces can be brought down.
And one message that I would like to, pass on to the girl students out there, I was getting average marks in mathematics, yet I could work on, such advanced technologies. So I urge all the girl students to take up these STEM courses. While you have indicated that, it's actually the leakage in the pipeline, but I still urge all the girl students to actually choose STEM courses so that, we have equal representation of women in all the sectors.
To have more women entrepreneurs or entrepreneurs in general, we need to have more entrepreneurs who are actually creating jobs, who are creating enterprises. And that's been the journey of WeHub. We have created more than 2,328 women entrepreneurs, and each of them has created an average of 2 jobs at least.
And you can catch that full conversation at 9:30 p.m. right here on CNBC TV18. With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV18.